Hello and welcome to the Algo Trading Strategies channel. In today's video we are going to explore a long-only strategy based on not the RSI but the ultimate oscillator, which is kind of a similar technical indicator that you can see at the bottom of the chart here in red. This is an oscillator very similar to the RSI, as I said, which relies on multiple time frames as opposed to the RSI, so it tries to reduce the false signals that the RSI typically shows. So if you don't know already, the goal of the channel is to construct a well-rounded portfolio of automated strategies, and these strategies are usually based on technical indicators. They can be long only, short only, and in that portfolio I try to allocate a specific weight to each strategy. So I select the strategies using sensitivity tests, and once I have a bunch of them, I construct that portfolio using the modern portfolio theory, and this allocates certain weights to each and every one of these strategies, and it tries to grow an account in a very steady fashion to the upside, of course, without too many drawdowns. So the overall approach of this channel is to use multiple strategies that are not too correlated between them. Like this, you reduce the drawdowns. So let's describe today's strategies rules. So the first rules that I had in mind and that I have tested is the following one. I enter along when simply the ultimate oscillator crosses over 50. So this is the mid value of this oscillator, which yields values in a range between 0 and 100, as you can see. So 0, it's never reached actually. Usually the lowest value are around 20 or 30, and the highest ones are around 70, like the RSI, the relative strength index, in fact. So the first idea was, in fact, when the ultimate oscillator crosses over 50, so I've added the line, the 50 line in white here, we enter simply a long, so it would be around this candlestick here in the daily time frame for Bitcoin. When the daily candlestick closes, we enter the long, and when the ultimate oscillator, difficult to pronounce, crosses below the 50 line, so it would be, I believe, here, you can see the value of the ultimate oscillator here, it would be at that candlestick, I believe. So yes, you would have a long of about maybe 22 days. So of course, for that kind of duration, I suggest that you use the spot market, and usually the entry and exit fees for the spot market are around 0.1%. So that's what I've used for the backtest that I've run. So this is the first version of the strategy. So now let's take a quick look at the sensitivity heat maps for this strategy's logic. So here's the daily sensitivity heat map. As you can see, you can change the oscillator short period. This is the x-axis, and the y-axis is the ultimate oscillator long period. So indeed, you can change these parameters here. This essentially changes how responsive the ultimate oscillator is to the price action. I've changed the length here, the first and the last one. I didn't touch the middle one. Like this, I can get a sensitivity heat map that's a 2D version, so the x-axis the short period and the y-axis the long period, and the best performances, the best Sharpe ratios here, which is a metric that combines both the performance adjusted to the risk we take. So the best performance is reached for these cells here, these green cells. Let's take a quick look at the returns. So the best returns so far are hit for a short period of around 9 or 10, and long period it goes from 20 to 40, but 10 maybe the best ones are reached around 35 to 40. So these cells here. But returning to the Sharpe ratios heat map, as you can see, as you may have noticed, the Sharpe ratios are not very good. They barely hit the value of 1, and usually a Sharpe ratio is considered good when it's above 1. So it's not exactly the criteria that I'm looking for to select the best strategies. Another thing also, the number of trades is actually good. It's around 200 or 300, so quite acceptable. Usually the threshold that I set to select the best strategies is above 100 over the whole backtest. So this is good for this, but this is not quite good for the Sharpe ratios. Here is one backtest based on the daily time frame for this first version of the strategy. So as you can see, it's not entirely impressive because the blue equity curve, as you can see in the middle chart, starts at around $1,000 and ends with $8,000. And on the top chart you can see the Bitcoin price in black, as well as all the long positions that we took, represented in the form of the green dots or the green bands. Means that we are in a long position. Here you can notice that the drawdowns are quite big, quite deep, So it's not absolutely the best strategies. As I showed you, the Sharpe ratios are not absolutely great. Still, for this bullish 50 crossover by the ultimate oscillator for the 4-hourly version this time, as you can see, the Sharpe ratios, this is the Sharpe ratios heat map, the Sharpe ratios barely hit 0.5. So these are not very good Sharpe ratios. That's why I decided to explore another strategy, and that strategy was the same that I applied for the RSI, and this time applied with the ultimate oscillator. So the idea is almost the same. This is in fact bullish crossover that we use again, but this time over 55. So I just moved up that white line to 55, and when the ultimate oscillator crosses above that white line, we enter a long. And when do we exit? We exit when the ultimate oscillator crosses 45. So this would be that value here. So here, for example, we would have entered maybe on this candlestick, so this green one, and then we would have exited the trade when the ultimate oscillator crosses below 45. So I think this is this one, so quite a long trade here of around 66 days, so like 2 months, and we almost capture the whole trade in our long trade here, so very good. Also, I use a simple moving average filter, so we enter a long when the price is above this white line also. So this is a filtering system so that we avoid the bearish trends as much as possible. So I have tested this version of the strategy. So the 55 bullish crossover, and we exit when we are below 45 for the ultimate oscillator, and we also enter only when we are above the 120 simple moving average. So here in the 4-hourly version, as you can see, the Sharpe ratios are far better than the previous version of the strategy when we entered only at the 50 bullish crossover for the ultimate oscillator. So here this is a more refined strategy. The Sharpe ratios reach easily 1 and above, even up to 1.6, so quite good. And here you can see the return multipliers expressed as X, how much times you would have multiplied your money actually. So up to 40 and more actually, so very, very good performance. So for the backtest, I've selected 9 and 22, so this cell, as you can see, I didn't choose the bluest cells, so I didn't cheat for this, because of course it's always easier in hindsight to select the best strategies parameters, but here we are in a bluer area, and this is the same for the Sharpe ratios. So this is about the best area. So let's take a look at the final backtest with this 55 bullish crossover, and we exit when it crosses below 45, and we have the filter that you can see in blue on the top chart, the 120 simple moving average, which lets us, as you can see during the bear market of Bitcoin, we don't enter much long trades here. The equity curve is absolutely great because we reach a 30x or so over the whole backtest, and also the drawdowns are quite substantial, yes, especially during the first Bitcoin drop in 2021 after the first all-time high, but overall it's a very good performance. So hope you liked this video so far. We explored a strategy based on the ultimate oscillator. If it is the case, please hit the like button. I'm going to continue testing the ultimate oscillator and different variants of these strategies on the premium member area. And if you are new to the channel and if you want to see more backtests for me in the future videos, please subscribe to the channel, and I see you tomorrow for the next backtest. Bye bye.